According to public sales tallies, F-Series was a monster in 2024, roughly 834,000 trucks sold. And while 2025 still shows the F-Series as the top-selling full-size truck, its year-to-date pace has softened substantially. So why the dump narrative? Part of it is perception. Dealers that in 2021 to 24 could move tons of inventory quickly are now pushing heavier discounts and incentives to clear units that aren't flying off lots. Wall Street and industry analysts point to a broad demand slowdown, higher interest rates, weaker consumer purchasing power, and a post-tax credit hangover in the EV market, all of which have compressed demand for new trucks and made aggressive dealer markdowns necessary. In plain English, fewer qualified buyers, rising monthly payments, and fierce competition equals bigger price cuts. Recent coverage and analyst commentary tie this slowdown to expiration effects around federal EV credits and shifting buyer urgency. Let's compare apples to apples. Last year, the F-Series ran at a blistering clip. This year, the cadence slipped. Ford's own Q3 commentary shows the F-Series still moving. But the pace and mix shifted, and monthly dealer inventories stretched in places. The most load-bearing stat for any truck maker is sell-through. 2024's roughly 834,000 EF-Series versus the lower YTD 2025 figures, Ford cited about 620,000 through certain reporting windows, which translates into a meaningful gap in absorption rate on dealer lots. That gap is what fuels headlines about millions of trucks sitting unsold across the channel when you aggregate slow movers, older model year inventory, and EV units that lost a tax credit advantage. From Jim Farley's chair, Ford's CEO has been candid about macro challenges and the EV roller coaster. In earnings calls and public comments, he's warned that EV demand could fall sharply once incentives change, and he's emphasized balancing production and pricing while protecting margins and brand value. Farley and Ford finance leadership have repeatedly said the company is pivoting, doubling EV production in some windows, accelerating cost programs, and planning for affordable EV entries. But they're also signaling realism about a tougher near-term environment for electrified trucks and pricey trims. Those are not defensive soundbites. They're the blueprint for how Ford plans to avoid being stuck with obsolete stock. A closer look at models and pricing shows another layer. The F-150 lineup is broad, from basic XL work trucks to loaded Platinum and Raptor variants, and hybrid/EV powertrains. And last year, the MSRP spread was wide. The advertised starting price on Ford's 2025 pages sits in the high $30,000 to low $40,000 band for base trucks, with properly optioned Lariat/Platinum/Raptor builds, pushing well into the $60,000 to $80,000 territory. That means dealers are sitting on two problem types: entry-level trucks that require cost-sensitive buyers and expensive, highly optioned rigs that need affluent buyers willing to stomach higher monthly notes. When finance rates and consumer confidence wobble, both ends of that spectrum slow, which forces selective model-by-model discounting. Supply-side wildcards complicate the picture. It's tempting to blame oversupply alone, but production disruptions, like the recent aluminum supplier fire that curtailed some assembly lines, have also created mismatches. Sometimes production pauses reduce availability of high-demand variants, and sometimes surges in production before a pause leave dealers with certain configurations they can't shift. Add recalls or warranty headlines into the mix, and buyer hesitancy can spike for particular model years or powertrain types. The result? Lots with uneven mixes that are harder to flip without targeted incentives or aggressive trade programs. Another strategic factor, Ford's push into EVs and hybrids has been both an investment and a risk. Executives have announced plans to increase EV production capacity and to invest billions in affordable EV platforms, including a target for the lower-cost trucks in the coming years. But those longer-term bets create short-term tension. Dealers loaded with last year's EVs that benefited from a tax credit rush now compete against the promise of cheaper, better EVs coming in 2026 to 2027. And consumers are often willing to wait. That waiting game lengthens turn days on dealer lots and amplifies the urgent need for price moves on older inventory. What are Ford's tactical levers? First, targeted incentives and finance deals to restore buyer affordability. Second, model-by-model production adjustments to better match demand signals. Third, retention programs for fleet and commercial buyers who can absorb volume. And fourth, advancing lower-cost EVs to reignite a price-sensitive slice of the market. Ford has publicly mentioned investments and plans for more affordable EVs and doubled production targets in some segments. but those are medium-term fixes. The immediate need is sell-through, which often means sharper dealer markdowns and creative financing. And yes, that's exactly what generates the dump headlines. Model-level comparisons reveal where sellers are trimming. Hybrid Power Boost and Lightning EV variants enjoyed high interest during the incentive period, but once tax credits waned, the relative price premium over efficient gasoline V6s became a harder sell, particularly to buyers worried about resale values and charging infrastructure. On the other end, Raptor and high-trim trucks that were status purchases face a smaller but more concentrated buyer pool. Dealers can't flood the market with steep Raptor discounts without damaging brand cachet, so those trims sometimes linger. That's why you see aggressive pricing on select XLT/STX and higher incentives on hybrid/EV stock, while premium trims remain pricier but slower. Let's talk numbers one more time. The crunchy core of this story. If the F-Series sold approximately 834,000 in 2024, and the reported 2025 pace dropped into the 600 to 650,000 range within comparable windows, we're looking at a decline in annual sell-through on the order of hundreds of thousands of units. Multiply lagging daily turn rates across thousands of dealerships, and you get the millions figure that makes for a headline. But important caveat, that millions sitting framing bundles different categories: unsold new internal inventory, dealer-held inventory in transit, parked unit counts, and aging model year stock. So the literal claim, 2 million F-150s dumped, is more a dramatic shorthand than a single ledger entry you can point to on Ford's balance sheet. Always parse those aggregated claims. From a consumer angle, this is a sweet spot. If you're in the market and financially ready, now is a negotiating environment. From Ford's angle, the priority is protecting residuals and margins, while preventing a prolonged fire sale that would damage resale values long-term. Expect to see a two-track approach: short-term incentives to restore velocity on vulnerable inventory, and medium-term structural moves: affordability programs, cheaper EV platforms, and supply adjustments aimed at preventing a repeat. But the timing and execution matter. Mishandling could hollow out margins and investor confidence, while doing it well could reset market share dynamics in Ford's favor. And the political economic backdrop can't be ignored. Federal incentives, tariffs, interest rate moves, and even regional supply shocks. Remember the aluminum plant incident? All changed the calculus overnight. Dealers and OEMs are reading the same tea leaves. When signals point to weaker demand, discounting becomes the fastest pulse check to keep lots from turning into long-term liabilities. Ford's public statements, investor calls, and their plans to pivot production are all consistent with the company trying to thread a needle between preserving price and clearing stock. So where does that leave us? The dumped 2 million headline works for clicks. But the real story is nuanced. Slower demand, macroeconomic pressure, EV tax credit fallout, supply chain noise, and strategic repositioning. Ford isn't folding, it's maneuvering. Dealers are slashing prices on specific trims and model years to restore velocity, while Ford's leadership publicly acknowledges the pain and signals a roadmap that mixes cost cuts, increased EV capacity, and new affordable models down the line. And if you want to know which trims to watch for the deepest discounts, look to the high inventory base XLT/STX models and the EV/hybrid units that lost the incentive bump. Those are the ones dealers move on fastest. But this story is far from over. There are still open threads to follow. How quickly will Ford execute production rebalancing? What will the seasonal demand curves look like entering 2026? And can Ford's affordability pushes for EVs actually translate into renewed demand before residuals and financing headwinds bite? I'll pick up from here next and dig into dealer-level anecdotes, specific regional inventories, and a model-by-model price watch so you know exactly where the bargains are and which trims to avoid. And we'll also parse how this affects competitors, used car values, and the wider pickup market. Now let's zoom into what's really unfolding on the dealer level, because that's where the pulse of this 2 million dump becomes tangible. Across the US, from Texas to Michigan to the Carolinas, Ford dealerships are quietly facing a mounting inventory crunch. In places like Dallas and Detroit, dealer lots that were half empty during the pandemic are now lined up with rows upon rows of F-150s. Some brand new 2025 models, others leftover 2024 trims that just didn't move. Dealers are even leasing extra storage lots and using nearby fields or abandoned shopping centers to park the overflow. These aren't wild rumors. Photos from dealer inventory reports and local lot listings reveal hundreds of units sitting for over 90 days or more without a buyer. And in the auto world, that's a red flag. For context, a healthy turnover rate for a truck like the F-150 is about 30 to 45 days. Beyond that, interest costs start piling up, and dealers have to pay floor plan financing, meaning every unsold truck costs them money just to sit there. So when you multiply that by hundreds of vehicles per dealership, the pressure is enormous. That's exactly why we're seeing Ford's most aggressive discounts in nearly a decade. Dealerships are now advertising $10,000 to $15,000 off MSRP for certain F-150 trims, especially those with optional packages or hybrid systems. And some Lightning EVs, once hyped as the future of American pickup technology, are being offered with lease deals so cheap they're practically begging customers to take them. Even the gas-powered XL and XLT variants, the bread and butter of Ford's truck empire, are showing unprecedented markdowns, just to keep cash flow moving. But here's where it gets interesting. Ford corporate is publicly playing a balancing act. Jim Farley isn't calling it a dump. In his own words, Ford is adjusting to a new market reality. He's framing it as a necessary reset, acknowledging that while consumer demand has softened, especially in the high-trim, high-margin trucks, the company's focus is on right-sizing production and preserving long-term value. What that really means. Ford knows flooding the market with heavy discounts can hurt resale values and brand equity, but they have no choice if dealers are choking on unsold stock. Let's put some numbers next to those words. In 2024, Ford's F-Series average transaction price was hovering around $63,000, according to Kelley Blue Book data. By late 2025, that figure has dipped closer to $56,000, a sharp decline that reflects both falling demand and rising incentives. Compare that to Chevrolet's Silverado, which saw a smaller drop of about $4,000 over the same period, and you can see that Ford's volume approach is backfiring slightly. The Ram 1500, meanwhile, is offering fewer discounts but selling fewer units, banking on premium loyalty. And then there's the EV wildcard, the F-150 Lightning. Once seen as Ford's answer to Tesla's dominance, it's now struggling with two major issues: cost and confidence. Early adopters love the innovation, but mainstream truck buyers balk at the $60,000 plus price tag and inconsistent charging infrastructure. Ford slashed Lightning production in early 2025, cutting shifts at the Rouge Electric Vehicle Center, and pivoted toward hybrid models, a sign that even the company realizes the market isn't ready to go full electric. Now, Ford is doubling down on what it calls the Blue Oval Reset, a strategic plan that combines lower-cost EV development, streamlined production lines, and what Farley calls leaner, smarter inventory. The new philosophy: build fewer trims, simplify configurations, and prioritize volume sellers. That's why upcoming 2026 models are rumored to focus on affordability and practicality. Less luxury bloat, more value per dollar. Behind the scenes, Ford's engineering teams are reportedly working on an all-new compact truck platform, potentially smaller and cheaper than the Maverick. Insiders hint at a possible sub-$25,000 hybrid pickup, something that could completely disrupt the entry-level market and reignite consumer interest. Farley has hinted that not everyone needs a full-size truck, signaling a shift away from the oversaturated F-150 segment and toward a more diverse lineup strategy. But here's the brutal truth. Until that next phase arrives, Ford is stuck in a painful limbo. Dealer incentives are draining profits, Production cuts are affecting suppliers and investor patience is wearing thin. Wall Street analysts have already started downgrading Ford's near-term outlook, citing inventory misalignment and price erosion. Stock prices have fluctuated throughout the fourth quarter of 2025, and although Ford remains profitable, its margins on trucks and once its crown jewel, Bahi, are under threat. Meanwhile, consumers are finally seeing the payoff. If you've been waiting for a deal on a new truck, this is the moment. Some dealerships are even stacking rebates with trade-in bonuses and low APR financing, effectively making certain F-150 trims cheaper than midsize SUVs. It's an unheard-of scenario. A full-size pickup, historically America's best-selling vehicle, now being marketed with the same urgency as a clearance sale. And yet, Ford's leadership insists this isn't a crisis but a correction. Farley recently told investors that inventory normalization is part of rebuilding balance after years of constrained supply. He argues that the market simply shifted. Buyers aren't gone, they're cautious. Inflation, interest rates, still the numbers don't lie. 2025's sales trajectory shows a dip of nearly 20% year over year, a signal that Ford's dominance is being tested not just by the economy, but by shifting consumer psychology. Buyers are gravitating toward value, reliability, and fuel efficiency, qualities that smaller hybrids and compact crossovers are capitalizing on. And that's where Ford's next chapter begins. With models like the next-gen Maverick, the upcoming Ranger plug-in hybrid, and the rumored affordable EV truck project aimed squarely at BYD and Tesla's price war. But the question remains, can Ford reinvent its truck empire before the market resets completely? Because if this trend continues, if those 2 million trucks don't move by early 2026, the ripple effects could be massive. Layoffs at plants, deeper dealer cuts, and a reshuffling of what Americans actually drive and buy next. And this is where things get even more intense. Because whispers from Ford's supplier chain suggest deeper production slowdowns, internal restructuring, and a surprising shift in strategy that could change the pickup landscape forever. According to several insider reports from Ford's supplier network, the company has already begun implementing what they call controlled throttling, a strategic slowdown in F-150 production at select assembly plants, including the legendary Dearborn truck plant and Kansas City assembly. These factories, once running at near 100% capacity to meet the truck boom of 2021 to 2023, are now operating at reduced shifts. The logic? Avoid flooding dealerships even more while still keeping key workers and suppliers afloat. But this balance is incredibly delicate. If Ford cuts too deep, it risks losing production efficiency and worker confidence. If it doesn't cut enough, inventories could balloon beyond control. And those suppliers? They're feeling the tremors too. Smaller parts manufacturers, especially those producing frames, aluminum panels, and hybrid components, are reporting trimmed purchase orders and delayed contracts. The supply chain, once overstretched, is now slowing down to a crawl. In Michigan and Ohio, suppliers have quietly started cutting overtime and temporary labor, preparing for what could become a soft production freeze through mid-2026 if retail demand doesn't rebound. Inside Ford's HQ, leadership knows the optics of this situation are critical. While dealers scream for relief, investors demand stability. Jim Farley, in recent internal memos, has told his teams that Ford's mission is not panic, it's precision. He's pushing what he calls the smart inventory strategy, focusing on dealer-specific data, building only what sells locally, and cutting back on redundant trims that confuse customers and clog lots. For example, the 2024 F-150 lineup had over 40 trim combinations and multiple optional packages. The upcoming 2026 refresh will reportedly slash that number nearly in half. This streamlining isn't just cosmetic, it's survival. By cutting model complexity, Ford can simplify logistics, speed up delivery, and most importantly, lower costs. Analysts estimate that reducing just 20% of overlapping trim options could save Ford nearly $500 million annually in logistics and production expenses. But here's the catch. It also means the end of an era where Ford offered a truck for every buyer. Instead, it's moving toward a tighter, more standardized lineup, designed to hit the sweet spot of demand and affordability. Still, the hardest hit remains the Lightning program. Ford invested billions into making the F-150 Lightning its electric crown jewel. But in 2025, Lightning sales plummeted nearly 45% year over year, dropping from over 24,000 units to around 13,000. Why? Because the math no longer adds up for most Americans. The average Lightning price hovers near $68,000, and with EV tax credits becoming unpredictable, that sticker shock is pushing buyers back to gas or hybrid models. Farley knows it, and he's reacting fast. Ford is now shifting some EV production resources toward hybrid expansion, positioning the PowerBoost and future hybrid systems as the bridge to the electric era rather than the destination. The goal is to offer efficiency without the infrastructure anxiety. The company's latest hybrid strategy, and internally dubbed EV Later, Efficiency Now, aims to make hybrids the backbone of Ford's truck business for at least the next 5 years. Meanwhile, dealers are pressuring corporate for more flexibility. Many dealership owners are calling this the toughest market since the 2008 recession, not because of a lack of buyers, but because of too much supply. They're seeing monthly payments that once averaged $800 now exceed $1,000 for well-equipped trucks, pricing out middle-income customers. Some dealers have even resorted to offering 0% APR financing, heavy trade-in bonuses, and regional marketing campaigns to move units. Yet, even with these efforts,